And just on this property theme, last night pointed out by Roland Hill that generally when we speak about property, the guests are relatively lukewarm around the listed property stocks, Growth Point, Redefined, Resilient, Pangborn and Hyprop, to name but a few. Deryck, is it an arena that you focus on at all?
I think listed property stocks offer a very sort of nice, safe, secure, safe haven within listed equities. And if you just look back over the last 18 months, listed property stocks have actually been your best performing asset class.
And over the last 10 years, listed property has been the best performing asset class.
And definitely in a time of uncertainty where you see a sudden sell-off, you see these yields where the capital value of these property stocks actually depreciates and these yields pop up. So it does offer a very defensive quality in a portfolio, but it's really more of your income type generating portfolios, you know, for people who rely on the income. But yeah, it gives you a nice defensive quality in a portfolio.
Cash build out with results, and we will be hearing from the management team a little later in the program. But your thoughts and how we interpret these results as a gauge of what is happening in the underlying construction environment.
Well, I mean, the construction environment's really been one that's been suppressed over the last 6 months, and you know they continue to be suppressed. And you've seen it in the reports in the likes of Marion Roberts, Wilson Bailey, Avenge. Their prospects seem a little unsure and uneasy about the next 6 months. But in terms of timing, the bottom of the cycle, this could be a nice time to look to enter it. Cash build, a very nice cash generative business. Nice to see their dividend increasing by about 23% and putting them on a yield of just over 3%. I like the business, but I still think the liquidity in the stock is still a little suppressed at this stage. But you know, if you're going to look to sort of bottom pick a cycle and hopefully get some long-term growth, this is sort of a buy and hold strategy. I think you can look to add some of these to your portfolio.
What are you doing with the gold stocks at the moment? We've got volatility in the gold stocks, and this is the old debate. Do you invest in South African gold stocks given the trouble associated with deep level mining in South Africa, the deep mining obviously costs of electricity, etc., etc.? When you've got record high gold prices, what is the theory here?
Well, you've seen these record high gold prices play out, but it hasn't really filtered through into these gold stocks in the likes of Harmony, Goldfields, Anglo Gold. And as you said earlier, I mean, these stocks have got a lot of cost pressures at the moment. Also, a very strong rand impacts on them very negatively. So from my perspective, I don't see them as a sort of investment sector of the market. It's more of a trading arena of the market that I tend to focus on. And they've been very volatile. I mean, just a couple of days ago, you saw Harmony up at 85 Rand. You saw Anglo Gold up towards 330 plus, and they've all pulled back now. So for me, it just offers too much of a high beta characteristic to a portfolio to actually look at saying, let's center and structure a portfolio around these stocks. I'd rather take a short-term view on it and look to trade those stocks.
And then the banks of late have been performing relatively well. And Judy Padiachi there saying from a technical perspective, Standard Bank looks in for better times from these levels. Would you concur from a fundamental perspective?
I like Standard Bank, and I think there is a little bit more upside to come from a stock like that and in the banking sector as a whole. I think the momentum is behind the banking sector. Just looking at Standard Bank, you saw it hit a short-term high of about 117 Rand, came all the way down from there, all the way down to about 100 Rand, 102 Rand, and you've seen it sort of tick up slowly now towards 107 Rand plus. So I still think there's a little bit more in these banking stocks, but it's not going to shoot the lights out. You probably find that this market is a little bit run hard.
And the question there then is the return, if we're not going to shoot the lights out, is the return worth the risk of investing at these levels, given the fact that we could potentially see a pullback?
Well, personally, on my opinion, I wouldn't be buying into these stocks at this stage. I think the market is a little bit overshot itself in the short term, and there is some profit taking that's due around the corner. But again, like I said, when momentum gets in the sales of some of these stocks, it can take it a lot further than what people expect. So yes, if I've got new money coming into the market, I'd rather sit on cash and wait for that pullback. But if I'm in the stock, I'd say let it run a little bit further.
Looking for positive data points, recently Kevin Ling's pointing out that he's focusing on job numbers globally, particularly out of the US, for some direction of the economic traction globally. What indicators are you looking at? We had US housing starts up today, 10.5%, and that was a big move. The markets are flat though, so equity markets a little unsure of how to react to economic data at this point.
I think at this point, a lot of the data that you're seeing, and a lot of analysts and traders and investors alike are of the opinion that sort of the worst is now past and the bottoms are in place. So, you know, looking forward, the market sort of priced in this positive sort of turnaround and possibly this positive data that we saw today. The market kind of anticipated it. So, you know, look, I think the jobs data is going to be important going forward, but just be careful because I think this market's just running on quite a lot of steam at the moment. So, you know, if it does come in line or even slightly better than expected, the market could have priced that in, and in my opinion may have priced it in already. So you could see the market sort of digest and pull back a little bit. But, you know, I think that this market at this point in time, the move through sort of the 28,600 level is quite key. And this market should be seen as a buy on weakness going forward.